Stocks and stock valuation. This is Chapter 7, Part 1. Following are the learning outcomes from this presentation. After going through this presentation, students would be able to describe the basic characteristics of stocks and features too, and how to read stock price and valuation information from commonly available sources both on the internet as well as on other places, such as official documents. Identify primary and secondary markets for stocks. And later on, we'll see how to compute the value of stocks using dividend discount models. So the characteristics of common stock are: common stock is a financial asset, and it has part ownership or equal ownership of a company's cash flows that are earned through profits primarily. But remember, cash flows could also be earned by financing activities, investment activities, and operating activities which produce profits. So a holder such as Mr. Kimani P would be entitled to be an equal owner of a company by owning the stocks of that company. Now, when a company makes all payments to its other stakeholders, now a stakeholder is not the same as shareholder. A shareholder can be a stakeholder, but all stakeholders are not shareholders. And here's how we can differentiate it. So a shareholder owns a part of company. A stakeholder need not own a part of the company, but the stakeholder has some interest in the company, such as they may have given a loan to the company, being a bondholder or a bank, or they may have traded with the company through raw materials, such as a vendor, or bought something from the company, such as being a purchaser. So all of these people are stakeholders. Now, suppliers and vendors, when they are being considered, the payments made to suppliers and vendors are expenses or operating expenses. Bondholders, when they receive their payments from a company, that is described or categorized as interest cost, and all of these go in the income statement. Similarly, government collects taxes from the company. That also goes into the income statement of a company. Finally, what is left behind from revenues by subtracting expenses and interest costs and taxes is called as net profit. Net profit is the value of profits or revenue that is available for shareholders to be using them as their income. However, notice how the taxes have been paid before profits are computed for shareholders. With these profits, the profits can be plowed back into new business, or they can be paid out to shareholders. Example of profits being plowed back are primarily companies such as Tesla and Amazon that tend not to pay dividends to shareholders. On the other hand, profits being paid to shareholders through dividends, good examples are companies such as Apple, or companies such as the oil and gas companies, Chevron, Exxon, Mobil, etc. So these profits that are paid out to shareholders are called dividends. Now, the most important thing of being aspect of being a shareholder of a company is that shareholders have a say in company's business. So if Mr. Kimani P is a shareholder of a company and holds, let's say, 1 share out of total issued 100 shares of the company, we're going to talk about what's issued shares in a little bit, just a little bit. Then Mr. Kimani P has 1% say in the entire operations of the company. Now, this equation might not seem significant, but it would become significant if Mr. Kimani was holder of 51% shares of the company. So suddenly the importance just grows exponentially. Between 49 and 51%, Mr. Kimani P becomes a majority shareholder, and therefore he can change the ownership of that company, who is the CEO, what is the business operation of the company, etc. So they can have more say in that. Shares do not have a maturity date. That's another important aspect of shares. And from above, the payments received as dividends by shareholders are categorized as income for these shareholders, and therefore they are taxable again. So the company pays out taxes to the government as a part of its income statement, but when the dividends are received by shareholders, these are categorized as individual income, and therefore again taxes have to be paid out to the government. So that is a problem of double taxation on equity holders as compared to bondholders. Some other features of common stock are: a company always takes permission from a regulatory authority such as a Securities and Exchange Commission to issue shares. So this is called authorized number of shares. Authorized number of shares are always more than the shares actually issued. Shares are issued through initial public offering, and these are offered through exchanges such as the New York Stock Exchange or the NASDAQ. Issued shares are available for purchase through secondary markets too. Once issued, the shares can be traded. And issued shares are generally lower than the authorized shares because the company wants to save some shares for the rainy day when they need in case of an emergency. And outstanding shares are shares that are available to be purchased at the most from at any given point of time. So these are the shares held by, there are some shares that a company can hold as treasury stock by buying it back from the markets and by not issuing them in an initial public offering, but just be held by the company itself for issue as stock options for its employees. And company can also repurchase treasury stock back from the stock market. So either the company can issue some stock to itself, or the company can repurchase its own stock from the financial markets through secondary markets by trading. Both of them are very popular methods of companies holding their own stocks. Now let's look at how the market looks like on the stock side. So let's assume we want to buy 25 shares. The way we can do this is we can use a market order. In other words, whatever is the best price available in the stock markets at that given point of time, we just use that price and purchase. Or we can use a limit order. We can say the market is trading at, let's say, in this example, between 24.50 and 24.51, 24.50 right here, and 24.51. So let's assume that this price is too high for us to buy. So we'll say, okay, I don't want to buy it at 24.50. I'll buy at 24.25. Now, obviously, since the market is not trading at that price, we had to wait for that price to appear, or the price may not appear at all on that given trading day. But if we can say, if the price comes to 24.25, then I'll buy 25 shares. That is called a limit order. Now here in this case, clearly the trade is not taking place at 24.50 or 24.51. And how do we know that? Well, this on the left is a list of all the buyers, or bid. Bid means buyers. So the best buyer, the highest priced buyer is 24.50, and it may be one buyer or multiple buyers, and their size meaning how many shares are they planning to buy at that price. So at that limit price of 24.50, there's a bid for 100 shares. At a price of 24.49, there's a bid for 75 shares, and so on and so forth. On the offer side, at the price of, what is offer? Offer means I can offer you my shares if you pay me this much money. So they're sellers. And so the best seller is actually the lowest price at which they're selling. So it's the best seller is at a price of 24.51, which is not equal to the bid price. Remember, if the offered price is equal to the bid price, the trade would take place. Since the trade is not taking place, that means a bid and offer have a margin. And that margin between bid and offer is always called spread. Remember, offered price is always going to be more than the bid price. So here, the difference between offer and bid, or the spread, is of 1 cent. And that shows high amount of liquidity in this particular stock, whichever it is. Sometimes stocks that are illiquid will have, or in aftermarket, stocks will have high bid and offer spreads. So that's one indication that there is no liquidity in that particular stock at that particular point of time. And in this case, you can see that there's a seller or multiple sellers. So the total offered is 25 shares at a price of 24.51. Total offered is 75 shares at a price of 24.52, and so on and so forth. Now, this is the best offer, 24.51 at a price, 25 shares being offered at a price of 24.51. The best bid is at 24.50. Let's assume we also want to buy shares at that limit price. So, and let's assume we want to buy 25 shares. So what are we going to do? We're going to say, yes, I'll also buy at the price of 24.50, 25 shares. Now, when we put our order into the screen, now the market sees 24.50 but the bid size is now 125 instead of 100. That's the only change that happens once we place our limit order. Now, we can also, it's important to know how stock market listings can be read. So the first thing to know is what is the current price of Delta Airlines stock. So this is the price of Delta Airline at a given point of time on a given trading day, and it's a real-time price as is reported here by Yahoo Finance. So first thing is, yesterday the stock, well, currently the stock is trading at 32.16. That's the last reported price as picked up by Yahoo Finance. And obviously there's something wrong because the price of 32.16 should be between 32.13 and 32.12, but that's clearly not the case. So there's a little bit of a lag, it seems, between the bid and ask and the market price. So either the market could have moved really fast or the market is slow to catch up in terms of bid and ask. And it happens. If there's a big buyer or a big seller, suddenly the price will jump. As you can see in the chart here, when the price jumps like this, suddenly a big seller comes and sells everything at any available price at a market order. And so the previous close, or yesterday night's close, was 33.21. So the market's lower than yesterday, by not much, but by about 8 cents. The next thing we need to know is what price did it open today. So it opened higher today, higher than yesterday, and the price is at which it opened was 32.39. The bid price right now that's going on, as reported by Yahoo Finance, is a bid for 200 shares at a price of 32.12. And the best offer, remember offer is always higher than bid, is 32.13. And the offered price has a volume of 1,600 shares. That means there's some really aggressive seller who's sitting here at 32.13. And in other words, it's just intuitively obvious that the market is more strong towards the selling side, although not necessary. But yeah, you can just see, look at the total size of buyers and total size of sellers and just determine approximately what's the stronger interest in which side of the market, buying or selling. And then the other parts here are not so important except this. Well, they are important if you're a stockholder, obviously, but the day's range is important for any other person who's interested in Delta Airlines stock. So today the stock price traded between 32.02 and 32.63. So although it opened at 32.39, it touched a high of 32.63 and went as low as 32.02 before settling in at its current price of 32.1213 range. Next is a 52-week range. So today's range was between 32.02 and 32.63, but annual one-year range it has been between 13.94 and 33.95. So one can notice that the annual one-year range is bigger than the one-day range, and that's typically the case. Sometimes they can be equal. Remember, the one-day range cannot exceed one-year range, because if one-day range at limit could be equal to one-year range. If there's a day of extreme volatility, then the one-day range could also become the last 1 year's range, because it's so volatility. What is volatility? Extreme high or low movements. And if both the high and low extreme movements of the whole year happened in that particular day today, then the today's range is going to capture the 1 year range, and that's very rare. Next thing is volume. This is the number of shares that I've traded today. So far today, Delta Airlines has traded 5.34 million shares approximately. The average 3-month volume of Delta Airlines share per day, so it's average daily volume on a day over the last 3 months, typically 12.7 million shares get traded per day. The market cap, this is important because it tells you the size of the company. So in the previous chart, we saw what is the meaning of outstanding shares. The outstanding shares of a company is the shares that at the limit could be purchased by any outsider through secondary markets. So the number of outstanding shares times the current trading price, 32.16, will give you the market cap. So let's verify that. Calculator. And so the market cap, well, we don't know the outstanding shares, but we can find out the outstanding shares. So 27,150 0.00000. I hope that is 27.15 billion. Million, yes, 27.15 billion is a market price divided by the share price 32.16. That's coming from right here. The current price will give us the number of shares outstanding. So currently Delta Airlines has 844 million shares outstanding approximately. The exact number is right here. So about 844, 216, 418 shares outstanding. That's how we can measure the market cap. Well, it's interesting to note that there are some very interesting market caps available in real world. So for example, Control T, let's look at the market cap of Apple Inc. Apple has a market cap of $2.45 trillion. Then what is the market cap? So these are some of the largest companies. So Amazon has a market cap of 1.01 trillion. Of Tesla, TSLA. Tesla has a market cap of 500. Well, the reason for that is its share price is lower. Look at the 1 year chart of Tesla. Tesla has gone low from $400 per share. It was trading at one point at $100 and some dollars per share. It's currently at 200. So its market cap has become half of what it was at one point of time last year. So the market cap would have been $1 trillion at one point of time, but no longer. Then some of the largest brick and mortar companies such as ExxonMobil is $406 billion market cap. So it tells you what is the market cap of JP Morgan Chase, $370 billion. So you can see how these tech stocks are really big. So off late the craze is behind Microsoft. Microsoft has a market cap of $2.08 trillion. So these are really large companies. On the other hand, if you want to see the market cap of Nvidia, its share price is high. So Microsoft share price is 279. Nvidia, the share price is similar, comparable, right? But look at Nvidia's market cap. It's not as high as Microsoft. It's only 600 billion as compared to Microsoft's market cap of 2 trillion. So it kind of tells you which company has more weight than as compared to the other. Share price is just a reflection of the value of one share. It really does not tell you anything too much significant as compared to that. We're going to talk about that next. So the next ratio actually is the price to earnings ratio. This is derived from earnings per share. Remember, we talked about profit per share, right? What is a profit available for shareholders to be either distributed or to be plowed back into company operations? So in this case, earnings per share is total profit divided by total number of shares outstanding. That is a profit per share essentially. And price to earnings is this price of Delta Airlines divided by this earnings per share. So we can see it through a calculator. So the EPS of Delta Airlines is 12.29, right? And the price is 32.16. So 32.16 divided by 12.29 is 2.61, which is exactly what we see here. So this is the earnings per share, profit per share of Delta. This is the share price. So price to EPS is price to earnings ratio. Typical price to earnings ratio can be found out again going to the real world. Well, price to earnings ratio for Microsoft is 31. For Delta Airlines on this particular day, it was only 2.61. So you can see Delta is not a cheap, not an expensive stock on this particular day. The price to earnings ratio, so for every dollar it earns, its price is only 2 times that. Whereas for Microsoft today, for every dollar it earns in profit, its price is 31 times that. Typically, the market cap. So let's see, P by E of S&P. That's why stock market index are very, very important. So the P by E ratio of my S&P 500 ratio 100 index, the stock market index, is approximately 16 on an average. It has ranged between 5.31 in December of 1917 to 123.73 in May of 2009, when the market was really overvalued. So that's why price to earnings ratio is so important. The last piece that you must know is the dividend yield. Dividend is the money the company pays to each shareholder of the stockholder. So here the dividend is 0.24 and divided by 32.16, the current price. It's, look at that, it's times 100. So this is 0.74%. So if this is the price and this is the dividend per share, then the yield is 0.7% approximately. That's called the dividend yield. How much money shareholders receive through dividends as compared to the price they're paying right now. Okay, so let's recap the key terms again. Market cap is the size of the company, its price times the number of shares outstanding. Earnings per share is profit divided by the number of shares outstanding. Profit per unit share. Price to earnings ratio is the ratio of the actual share price divided by the earnings per share, profit per share. So what is the price we are paying? What is the price multiple we are paying per unit profit of the company per share? So it tells us whether the share price is cheap or expensive. As we saw in the example today, Delta was cheap whereas Microsoft was not, and we compare all of them with the S&P 500 price to earnings ratio. Remember, nominal price does not tell us whether the company the stock price is cheap or expensive. Nominal price is the actual number that you see in the stock screen. The $32 for Delta does not tell us anything about whether it's cheap or expensive. Last thing we studied was dividend yield, which is the dividend dollars divided by the share price, and it's dynamic. As the price changes, the dividend yield changes. So when the price goes up, the yield will go down, because remember, share price is in the denominator and dividend is in the numerator. To conclude, common stock is a financial asset. It signifies ownership of a person in a company, and it's residual ownership because whatever is the profit that's left behind is all the company owner's money. Important to read stock price quote from financial markets, especially the price to earnings ratio. That's a true representation of whether the stock is expensive or not. Primary market, we saw how primary market listing can be important for a company. How do you find out the value of the stock? So primary market is through IPO, the first sale of stock, and secondary market is after sale. So we saw how companies can buy back their own stock. And that's chapter 7, part 1. Thank you for